Particularly delighted, to be a part of a platform which is encouraging female entrepreneurs because I really, really stand by this cause whereby I feel that women really have the power to lift and build others, and I think this is just one of those drops in the ocean that are needed to lift women and the wider generations going forward. I'm the co-founder at a company called Tez Financial Services, which is a fully digital neobank. I'll be covering, some aspects of Tez in this webinar as well. And what the main agenda of today's session would be to highlight one, what areas Tez is working in the fintech space. What's the background within Pakistan to begin with that calls for a need for financial innovations. What's happening globally in the financial innovation world, and what are the focus areas that one needs to consider when you are really to have a successful shot at financial innovations within Pakistan or outside. I without further ado, I'll just start sharing my screen and just come on to the session. I hope you guys could see this now. Well, I think touching upon some numbers, and this is something that most of us are already, aware of. Pakistan is a country that requires there's a huge potential for financial inclusion. So 150 million people are deprived of basic financial services. They don't have access to credit, savings, insurance, and investments, which are considered to be basic services needed to deal with their day-to-day lives. Now, something as small as 1,000 rupees can actually help these people cope in times of financial difficulties, to pay for something as basic as food, as essential as medicine, or even as empowering as a school fee. Now, the issue right now, because of which 7 out of every 10 people in Pakistan do not have access to formal financial services, is twofold. One is on the side of the masses, which is the customers, and the other is the financial institutions. Now, this is where a gap primarily exists. Now, if you talk about the customers, there are three core issues that currently lie. One is there's a lack of credible data. Now, this data is actually needed by these financial institutions really to understand the risk profiles of these customers. And with most of these customers, that data is lacking, or these financial institutions at least do not have access to those alternative forms of data that can help them to address their risk assessment requirements. Secondly, most of these people do not have suitable collaterals, which actually serve as guarantees in case of credit repayments. So that's another area that's really missing for most of these people, because they belong to a social demographic profile where they can't cover these collaterals. And thirdly, which is actually a very important area, and I think this is going to tie well with the financial literacy element as well, is the lack of credit histories. Currently, only 1 out of 10 people in Pakistan are registered on a credit bureau. And since they do not have credit histories, financial institutions deter to serve them primarily when it comes to lending. Now, if you talk about the financial institutions, what happens is that there's still legacy systems that they're following. There's hefty paperwork and procedure that they follow, which actually deters them from reaching these masses. In addition, their processes are very time consumptive and human intensive. Altogether, their access to these masses, which are far flung, is limited by their costs that also require brick and mortar presence, and of course by the risk assessment that is limited by the access to data. Now, all in all, what happens is that this culminates into two primary issues. There's a lack of trust on the part of the customers, and there's also mismatched needs at the part of the financial institutions because they're not providing products that really match the needs of the masses. So there's usually a one product fit all culture that's followed by these financial institutions. Now, while the financial inclusion landscape is bleak, or has been bleak, to date, the digital landscape has really jumped leaps and bounds in Pakistan. Every third person in Pakistan owns a smartphone. And this is supported by our teledensity figures, which lie around over 70-80%, which is one of the highest in the regions. You talk about 3G, 4G coverage, over 90% of Pakistan is 3G, 4G coverage. And you have the branches banking railroad that's been set up by our branches banking providers, which actually have really tied in well to provide that platform on which now additional financial services uh, can be topped up. If I am to bring in a mix and to really talk about Tez while I move on to other financial products, Tez is a fully digital financial institution which actually banks on the smartphone railroad and provide frictionless financial access to the un- and underbanked of Pakistan. We aim to provide a full slate of financial services, which includes credit, savings, insurance, and investments, all through a single platform, which is a smartphone application. And as the name implies, Tez, we provide smart and fast financial services using using a data-driven approach. And as you can actually somehow make from here, we aim to really have an epitome of the Maslow's hierarchy of needs within the slate of products in Tez. We aim to draw them in through nano loans and address their liquidity needs, then take them and interest them through organic saving avenues. What we're currently now working on is bringing in savings such as fractional gold and digital committees. We have recently launched our insurance vertical, which includes health insurance and a complementary suite of health services such as online doctor consultations. And ultimately, in the future, we aim to bring in investment products to really empower the masses economically. Now, what really happens here is that we're riding on the smartphone railroad, and we use alternative forms of data to assess creditworthiness and build digital profiles of these customers. So what we do is we use in-house algorithms. These are proprietary algorithms that use various forms of data that actually assess various forms of data, including smartphone data such as SMS and call logs, amongst thousands of others, and also transaction data that we receive from our partnerships with telcos and banks that help us further strengthen that assessment of risk for these customers. And if I am to really quickly cover, these are some of the purpose or vision, the value proposition that we aim to cover. And this really ties in with the overall financial innovation that that I will be leading into in the next part of the session. Now, while we'll be providing or meeting the consumption needs of the masses, we're doing so instantly. So there's instant gratification. Now, the time that it takes, conventionally, what happens is that when you talk about getting a loan from a bank, even getting a credit card, for example, it takes nothing less than 30 days for a bank to approve you of a credit card, even if they decide to approve you. And that journey is really arduous, and it's not inclusive of the entire population. Very limited access is provided to certain niches within the social demographics of Pakistan. Tez provides a loan, for example, right from the point of download till the point that funds are dispersed into someone's wallet within 10 minutes. But this is groundbreaking, and this is something that we've been trying to work on to provide the seamless customer journey to the customers, where their needs are really addressed instantaneously. And ultimately, as we're using data for profiling, we aim to build in cross-sell synergies using AI and the data that we receive from our customer segmentations and customer profiling, and ultimately take them through that journey of financial products. Now, this actually ties in well with the overall digital financial innovations that are happening in the world. I think a few areas that have been very exciting for me, at least, have been those of blockchain. The third one, other than FinTech, I spoke of the sharing economy, which is, I think, an area that is becoming even more so important because I think with the need of partnerships in place, you need incumbents and fintechs really to collaborate to be able to achieve efficiencies or economies of scale. Because as we see, customers are becoming increasingly more tech savvy, and their need for lower cost and convenient services is becoming even more pronounced. And I think now you see that you see increasing collaborations between the fintech arena and banks or incumbents at large. If I'm to then come on to another area, which is blockchain, and I was mentioning earlier, it's actually serving to bring in three core areas of significance. It not only acts as a central intermediary, eliminating the need, but it's also enhancing efficiencies, via authenticating and authorizing transactions, which otherwise would take days. This actually happens within minutes or seconds. So that's another area. And I think the third one is that of creating an audit trail. Now, with the distributed ledger in place, creating an audit trail becomes even more so important, particularly in a world right now where AML and KYC requirements have become so much more stringent. And I think with blockchain, you can actually come into the field of RegTech as well, which is now increasingly using this technology. Now, the fourth, the last aspect that I was talking about was that of AI and using data. Now, when I talk about data, data doesn't only cover data that is derived from conventional sources, but also to alternative data. You have smartphone data, you have telco or mobile data, you have bank transactional data, social media data. There are various forms of data. And if you talk about now the more developed areas, even countries like China, for example, they are using data from all sorts of sources, and this includes social security data, and so I think that the use of this data is actually enriching insights that one can actually gain in understanding consumers. And when you actually can do that, you can actually serve them, not only mitigate your own risk, but also serve them better by understanding their needs better. So I think that customization element really comes into play by understanding and assessing this data even more rigorously. Because for example, what we do is this data not only helps us assess credit worthiness of customers, but it's also currently helping us in customer segmentation. And so identifying, what kind of customers, what kind of product can serve what kind of customer. So I think that data can serve various purposes if put to use rightly. Now, one area that I was actually going to come to was that of the different trends that are now really coming into play. And I think these trends, as we speak of, are not only in the payment services place. You see, mobile wallets that are coming really, really, with, if you talk about within Pakistan, at least you've got, PSP and PSO licenses that are now really drawing a lot of attention. You have EMIs, electronic money institutions, that are building not only, that are actually bringing in open loop wallets, banking on the banks, and giving them the opportunity to bring in various financial products that can actually reside on that wallet. Now, one thing that I feel, and we talk about this very, very often, is that payments is very, very important for any economy, and if you are to really encourage digital, the payment infrastructure is imperative. But if you talk about a country like emerging economies like Pakistan, payments alone will not do the trick. If you want people to really transcend or shift from cash economies or cash related transactions, you need to provide people with additional case studies or use cases within those wallets or those payment platforms that pull those customers into that digital field. For example, currently, if you talk about mobile top-ups or utility bill payments, they've been primarily the core areas of these payment service providers. But you see that they haven't really enhanced adoption. And if you are really to enhance adoption within these fields, you need to top up these wallets or these payment platforms with additional services such as credit, for example, that really address the needs or mimic the non-financial or the non-digital journeys of the people, and bring them on digitally. Secondly, I think another very important area that that would have to be served is, currently, if you talk about from the perspective of a common man, for him or her, digital is still more expensive than cash. That's the perception that people have. For the wider economy, cash is very, very expensive. If you talk about, for example, printing of cash, circulation of cash, etc., so and so. But the perception still exists that for a common man to transact digitally, they still have to incur more. For example, cashing out can be very expensive, even at these agent networks, or even the transaction costs that are incurred by the mobile wallet providers. There are elements of taxation that come into play. So unless these issues are not resolved, I think the element of converting cash to digital will still exist. Now, I feel then there are certain areas, especially ever since COVID has come into play, InsurTech has gained a lot of momentum. And we really hope that this momentum continues. Although insurance is one of the toughest financial services to sell, particularly in areas, countries like Pakistan, where people are more concerned about their urgent or their current liquidity needs rather than saving for the future. Uh, Now, I think a few focus areas that I would actually draw attention to in the financial innovation space, and I stressed upon this earlier, is number one, the power of partnerships. So collaborations are imperative in this space, not only for startups, but for incumbents as well. Because as we see, incumbents are really slow to move. The legacy systems don't allow them to be as agile as newer age startups or fintechs are in this space. So if they are to really move faster and grab, more of the market share, the best way to do that is actually to invest more in partnerships or even investments in the fintechs in this space. The second thing that I've actually stressed upon a lot is high tech with high touch. I think one thing that we have really gotten very in tune to is just pursuing a high tech infrastructure or an ecosystem. If you are to encourage people to adopt digital financial innovations, you need to make sure that their needs are really being met. And that will only be done if you provide a customer journey that really, while being high tech, is also high touch, providing the customers the ease of use, the convenience, and the need that is being met via those financial innovations. So that's another area that I think I would really stress upon, and we at Tez really do stress upon this a lot. And I think one area that the trick that actually meshes well with this is having a purpose. For any financial innovation that you're bringing in, if it's meeting a purpose or a need, only then will it really, I think, succeed in the longer run. It's not only about launching products, it's about making sure that those products are ultimately sustainable and they're actually driving a use and meeting a purpose. Now, I think with time, another area that is actually gaining, particularly in Pakistan, a lot of importance is that of AML and KYC. And I think RegTech becomes even more so important here. And when I talk about KYC and AML, I think an enabling environment is very, very important in this area. And I think the regulators in Pakistan are really trying to think about those aspects to make sure that, particularly with being in the grey list of the FATF, we are, increasingly more so scrutinizing the way we're providing these financial services or the customers that we are serving right now. Now, if I am to talk about, an enabling environment, for example, for me, certain areas really stand out. And that would be a centralized KYC. Now, Nadra's role over here becomes very, very important, particularly when it comes to digital identities, for example. And centralized KYCs, whereby all the financial institutions can actually access a central common point of assessing a customer's details or profiles, can not only save costs, but also provide a very, very complete view of what the customer is, where he's actually approached a financial service or institution, and not only within the financial services space, but also overall, other than the financial institutions, how do they lie in the overall social security net? So I think that's one of the very important areas here. The second area for me here would be that of a centralized data repository. Now, data repositories are very, very important, and we see them in other parts of the world. Places like China, places like India, for example. These centralized data repositories actually provide access to different avenues or different forms of data, be it telco data, be it bank transaction data, be it social security data. All of these are become they're imperative here to actually enhance financial profiles of customers. And I think when financial services have access to these data repositories, they can actually make better decisions and serve customers better. So I think the regulators now increasingly have to focus on these areas as well. And I think third, which and not the last, which actually will help me transition into the next part of the presentation or the session, is that of centralized credit bureaus. Now, as I mentioned earlier, 1 out of 10 people in Pakistan are on a credit registry, which is a credit bureau. Now, credit when people don't have financial identities, they are actually really excluded from the financial net to begin with. Well, fintechs and newer startups, they're actually giving access to financial services even to entities who do not have financial identities on the credit bureau. In essence, they're actually building financial identities, and ultimately, they can now graduate these customers to the banks, the more matured entities who can then provide them other financial services. So with centralized credit bureaus, one can actually have access to different customer data as well, and help them transcend to more advanced financial products. And when I talk about the credit bureau, I think this actually takes me to the next part of the session, which is that of financial literacy. And I think most people actually are not even aware what a credit bureau really is. Now, and because they're not aware what a credit bureau is, their financial behaviors or even access to financial services is really tainted by that. Well, I think one important aspect here is that the State Bank has tried to bring in that element of financial literacy under the National Financial Inclusion Strategy, an aspect of which covers the National Financial Literacy Program. Now, if you talk about Pakistan, currently, not even 20% people in Pakistan have access to a bank account. And this number is actually a little, for me, overstated, because, we're now counting mobile wallets that are not even active under this number. So it's a number even lower. And if you are to talk about Pakistan, we have financial literacy lower than most aspects or more areas within this region, more countries within this region. And if you talk about women financial literacy, that's even lower. If I am to touch upon some numbers, for example, in Pakistan, if you were to say 30% of the adult males have access to financial services, only about 7 to 10% females have access to financial services. And this actually, in a way, is a proxy to see that financial literacy really is very, very low in Pakistan. And with time, I think the need or the focus on building awareness on what these financial products are is a responsibility of all the financial players in this industry. I think since Pakistan, the fintech industry is so nascent in Pakistan, I think we don't only have a responsibility to enhance financial inclusion of financial services, but I think our responsibility is even more pronounced because we have now a responsibility to enhance financial literacy as well. I think I actually would like to touch upon a campaign that Tez has recently started. So I think collaborations here, as I was mentioning earlier, have become even so more important. And it's not only private partnerships, but also public-private partnerships. So we've collaborated with the government of Sindh, the Women Development Department of the government of Sindh, and JICA, which is the Japan International Cooperation Agency, in developing financial products for the females. And one core area that we are addressing to begin with is that of female home-based workers. And what we're doing is we've actually produced a series with some of our partners, which are episodes to enhance financial literacy. And this covers, enhancing inclusion, enhancing literacy on credit, savings, budgeting, and insurance. So we have a few episodes that are going to be coming in live, but we will be starting with, the first episode. I think I would like to actually share a glimpse of the series, or the first episode of the series that we will be covering in Pakistan. And if you'd allow me, I'd like to. It's like a 5-minute glimpse, and I'd like to share it. This is actually currently it hasn't been launched. We'll soon, and people are interested in showing this, to customers, within their own financial institutions as well. We'll be happy to share it with you guys. And I think I just, if you allow me to share the screen, I will quickly just cover this for you. Just give me 1 second. Let me know if you can see it, and if it gets disrupted, please let me know. I will, just stop it. I think what I'll do is I'll stop this here, because there's a lot that there's much more to it, and if anyone is interested, we'll actually be launching these soon. So I think I'd be happy to share this. So, if anyone is interested to launch this within their platforms for financial literacy, we've actually developed this with the Knowledge platform. They've actually developed the National Financial Literacy Program for the State Bank as well. So, let's see. These are the various parts to it. We'll be happy to share this, to at least help meet our part. So guys, I would be happy to share any questions that you might have. Let me know if that's would be good to go. Well, see now, I think the question is how can AI be helpful in corporate finance? Please quote some examples. I think corporate finance is a very, very vast field. If you are to talk about corporate finance, I can talk about places like wealth management, investment management. Even if I am to talk about credit ratings, for example, that's also an area of that. Now, what happens with AI is that we actually can assess customers, what they need through their transactional data, or even from the behavioral patterns. What AI can do is it can actually identify patterns much faster and much more minutely than the human eye can. Of course, it's ultimately the humans that actually feed into those codes, but the data that is actually exposed, to the algorithms is that the algorithms actually feed on the data that's fed into them, and they can actually build patterns. And every time a new customer or a new entity actually is exposed to it, they know what kind of patterns they've already seen in the past, and they can actually help you make decisions based on what the algorithm has been exposed to. For example, if you talk about the asset management space, um, I think AI can really help understand, what kind of investment decisions or what kind of investment instruments would suit a customer best. Keeping in view their investment appetites, their investment horizons, or even what kind of behavior that they followed. So I think there's a lot that AI can look into within the corporate finance space, be it AMCs, be it lending, be it wealth management. A lot can be actually looked into the AI space. Okay, so there's another question that we have. How many months expenses do financial planners recommend that you set aside in an emergency fund? I think that's very, very relative. And I think it would really vary to the purpose of that saving. Well, for me, at least, I think financial planning is it can actually include anything ranging from 6 months to 12 months, depending on what your role is. But when you talk about people, for whom even meeting the day-to-day needs is a problem, even if they could actually meet their next month's needs, or could save for their next month, would be a huge, huge achievement. And I think what we're really trying to encourage, and we've seen, with our interactions with primarily females, is that they're better savers when it comes to compared to males, for example. So I think how many months would really be very relative to individual needs and the state of your lifestyle that you're in. So I really can't really comment on a very, very absolute number there. Okay, so the question here is, what's a target market for these financial literacy videos in terms of demographics, education? Also, do they typically own smartphones? Yes. So Talha, yeah, that question is really important because when we actually set on creating these videos, we were actually primarily looking at female home-based workers for whom these videos were created, and primarily women in the areas where they don't where financial literacy is fairly low. And yes, these people do own smartphones. Even if these women themselves don't own smartphones, someone in the household definitely owns a smartphone. And we've seen with our interactions with our customers that it's usually the males of the household that own these smartphones. And even if the females want to access a financial service, they do it through the males of the household. So a lot has to be done in this space. You have currently 80 million smartphone users in Pakistan, which is a number that's growing with time. And if you talk about these financial literacy videos, it's primarily targeted, for these particular social demographics. Where and I think one very important aspect that I'd like to highlight is that this is not only in Urdu. We've actually created these videos in Sindhi, and now we're creating it in Pashto as well, so that we can actually launch it in other provinces of Pakistan. Another question is, how can government policy help innovative finance succeed? Well, see, I think the government has a huge role to play in enabling environment, in creating an enabling environment. And I think now there's not only the State Bank of Pakistan, but also the SECP that's actually bringing in new financial regimes that encourage new entrants that are innovating in financial technologies. So I think what the government should do and try to do is that the areas that are still to be addressed. I think one of the areas when you talk about the newer entrants is that of funding. I think a lot of support is needed. You do have, certain incubators and accelerators that are in the field here, but a lot more can be done because I think funding is a tough area for Pakistani younger startups, at least today. So I think the government can play a major role there. Secondly, I think when it comes to providing a conducive environment, it becomes very important to encourage these companies and provide them tax release in various areas. So I think taxation would be another very important area. And I think one more area that regulators are already doing is that of sandboxes. State Bank has its own, the SCCP has its own to encourage these innovative technologies. Even if there are no regulations or licenses for them to begin with, I think sandboxes play an important integral role to actually experiment and pilot with these technologies and see how they could actually succeed, even if they are to do so. So I think these are a few areas, and I had mentioned a few other areas overall when it came to data, when it came to repositories, when it came to KYC. Those areas they stay as they are, and they are integral to the overall innovation in financial services. Yeah, so there's a question. Sama, you talked about customized KYCs, data centers. How long do you think Pakistan will take to fully adopt this? Okay, so I think data centers and customized KYCs would be two separate areas. Data centers is a very, very important area, and you talk about hosting and the cloud infrastructure. And it's still, I think, in Pakistan, it's still fairly nascent. You don't have a lot of players in this field, which is why it's also fairly expensive. You talk about, avenues such as AWS, companies like AWS that are providing these services outside of Pakistan, and there are much more economies of scale achieved there because they have already, provided these services all around the world, and they can actually pass on those advantages to other companies all over the world who are availing those services. So I think in Pakistan, we need more of these players to come in so that, those economies of scale can be capitalized upon. And not only the larger entities, but I think the smaller entities could also capitalize on it. When you talked about customized KYC, I think for me, centralized KYCs is the word that I use. And I think for centralized KYCs, a lot has to be done because it's not a very straightforward avenue. There's NADRA involved here. There are agencies that are involved here. And I think digital identity is a very, very sensitive area. And particularly, I think it's not only about providing verices, which is already being provided and at a high cost. It's about providing, access to NADRA services through digital means, so that services other than branches, banking providers, or banks can also avail the access to those identities via APIs rather than just having primarily to go through biometric verification, for example. So I think it's a lot. It's more so to do with willingness and a policy initiative there as well. Before we can actually proceed this. So if there is a willingness, I think it's only a matter of time where entities can start using it. Uh, so the question here is, the video that I shared was a glimpse of it, and the question is, are we planning to inform and educate the target class about a product? Yes, this is the first step. This is just a very initial, a teaser that you saw. There are various aspects to the video series here. We are not only talking about budgeting, but we also, talking about what mobile wallets are, how to build credit, how to save, so various avenues or various financial products that we are actually covering within these episodes. And I think we are actually within, the sample size that we are looking into. We will be conducting demos, from the target audience that we have selected, to show them how, Tez is operating and bringing in these financial products digitally. So, for example, we're not only talking about digital credit here, we're also talking about digital insurance that we've launched. We're also talking about digital gold savings and digital committees. So these are, we soon shall be conducting these literacy campaigns. Unfortunately, due to COVID, they have been restricted, but we've had plans to, go on to the field initially to have that high touch element and to educate our customers on that front as well. So there's a question: how do you plan to tackle the mentality of people who feel exposed if they become part of the digital system, who are scared to share their credit history? Now, I think that question is very valid. And I think the element here is more so to do with trust than anything else. And I think a few areas that become very important is that of customer privacy, customer data protection. And I think particularly with GDPR in globally and data protection acts coming in, um, the purpose of these acts is actually to address this particular need. Now, if you are to talk about credit histories, I think customers generally, initially when Tez, for example, launched, I can share my own experience. Customers used to, they used to raise concerns on why should they share their data to begin with. Is this even a credible financial institution to begin with? And I think initially that question mark is more so relevant when people are putting in cash or giving cash in institutions. Since we were actually giving out cash, I think that area was it was relatively more easier to build that credibility. So I think institutions and customers started actually sharing data because we were giving out money. And I think with time, since we've been building brand awareness and we've been building brand credibility, customers have become more conducive to sharing that data because we have contracts in place that actually guards that. That's on the front of the customers. At the back end, we have proper systems and procedures in place that actually encrypt that data. And being a regulated entity, we have various regulatory requirements that we have to abide by to ensure customer data protection and privacy. So we are actually we are educating customers at that front as well, providing them building that trust and providing them comfort when they share that data. So there's a question on how do you plan on doing impact assessment for these financial literacy videos? Also, your assessment of SPP initiatives in this space, like financial literacy training. So I think what it's a very financial literacy is a very gradual process, and I think impact assessment is a very important area. And I think that really ties in very well when we launch these products and the traction that comes in. So even if we launch these literacy campaigns right away, it might take time. When the repercussions or the impact of these literacy campaigns trickle down, or the network effects are gained for these literacy campaigns. So I think we could actually definitely see them in the financial behavior of the customers, and the not only in terms of the repayment behavior that we see with our credit product, but also the uptake that we see on the front of the new product that we're launching when it comes to savings. And when we talk about the wider audience, this is definitely going to take time for that trickle down effect to come in. But if we are to talk about the sample that we're targeting within, SIN, for example, we have some target areas that we are looking into, that we will be looking on ground to assess how these financial literacy campaigns really had an impact in their understanding of those products to begin with. So it's a journey that we're covering in the next 6 months, and we will be looking into this impact assessment. We also have some researchers that have come in from Princeton University who are covering different elements of financial literacy on ground to see how our services are being perceived by customers that we are targeting right now. So the question is, does Tez has anything for the modern female? We have female entrepreneurs, working women, anything for the educated modern female. But I think it's very important to know that all these financial products are for everyone. They're not only for people who are financially illiterate or people who are unbanked. They're also for people who are underbanked. These people might have bank accounts right now, and they can be very, very financially literate. And what Tez is really trying to do is it's really trying to digitize the way conventional Pakistanis really deal with financial services in their daily lives. So I think a couple of exciting products that are coming, and I think females will be primarily interested in, are those of Tez Gold and Tez Committee. Tez Gold is a digital gold saving product which we are actually launching with ARY, and people can come and save in gold as low as 100 rupees at the spot price of gold, and they can keep building their gold portfolios. And if they wish to, redeem that gold, they can come and redeem anytime, either in cash, or if their gold savings have reached a certain threshold quantity of gold, they can redeem physical gold as well from any ARY gold outlet. So that's a very, very exciting product that we're really looking forward to, and that shall be going live within the coming months. So stay tuned to that one. Another product that I think is very popular, not only amongst the females, but I see amongst the wider population, is that of committees. So we are digitizing committees not only as a management tool for committees, but we've integrated with, with wallet providers and branches banking players, whereby people can actually, we'll be managing the funds for the committee members as well through the Tez platform. So that's something that we shall be launching within the next couple of months. And this is a well-awaited product. So we hope that this is something that will excite, the women in Pakistan.